And you study trend channels. Trend channels are my favourite form of structure. Well, we briefly mentioned the ambiguity or somewhat difficulty with diagonal structure. Simple demand or supply lines in trend channels. We do need to use our artistic license in full effect with trend channels. However, there are a couple of general rules that apply to construction to get the most out of this useful tool, and we will go through them during these studies. These are the hardest of all structure to apply, however, also the most rewarding. The amount of data you can obtain from trend channels far outweigh axis lines and support and resistance, and this is why they are personally my favourite form of structure. So they are diagonally drawn, so in an uptrend. So this is a channel. Okay, so we draw always, so this is an upside channel, price is going up, and we always draw the lows first, and then we hit the parallel, which is in your charting software. And for downtrend channels, highs are drawn first, and then we add this line, which will be the parallel. Now we'll briefly talk about overbought and oversold conditions. So when we're in an uptrend, so this is an uptrend channel bouncing around here. When we approach the supply line, because this is our demand line in a channel, so this is an upside channel, so this supply, so this is the supply line, this is the demand line, and when price touches or gets very close to the supply line, we are considered to be overbought. Why? Because we're buying and we're moving up. Okay, and the same applies for downtrend channels. When we come down, this is our supply line, this, apologies, it's very difficult with the mouse. Let's get that a little bit straighter, and price will bounce between the channel, and then once we approach or we violate here, this is our little violation, this would be considered to be oversold. Okay, so let me just brief that quickly. Uptrend channel, bounce, 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 bounce here, OB, overbought. Down channel, down, 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 hit here, over sold. That's it. Nothing more complicated, but very important information, and you'll find out as we go through. We also have the flip side application, the same as simple demand lines or simple demand and supply lines. When we bounce around and we come up top, this should act as now support as it was resistance, and the same in the downtrend channel. But we want to see a working valid channel that has had multiple touches, and we see it contain price before we even think about using the flip side reverse, the flip side use of a channel. I mean, that's very niche. Not many people do this. So we want to see multiple touches, see it holding. See, this is our demand, and we can go both ways. So we can break down here, where that should act as demand. We should take off here, but we come back, then acts as supply, resistance, and here we can bounce off and that acts as demand. Okay, so we can do that here as well. Bounce, 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 come back, then this acts as resistance, and then we come down. Okay, so that's a flip side application, and you can use it on both the supply lines and the demand lines. The supply line here and the demand line here. Good. So let's go on to our study. Here we have the perfect way to draw a channel. We have a low at A, a low at B, and the intervening high at C. picture perfect. Okay, so I would draw this in here. Now as we get to here, and we can see a touch and a mild violation and a touch, and then we begin to rally, I'm thinking, yes, this is a good channel. So we rally up, come up. What's this? Our supply line. We'd expect resistance. We'd expect selling to emerge, and boom, we do. Look, we get a mid bar closing off the highs. So we know that selling has emerged at resistance. So here, as we're rallying up past here, we're thinking, yes, this is a good channel. Now, because of this is a working channel. What do I mean by working channel? Well, it's a validated channel, you know, it's confirmed. Now, I'm going to take positions. Now we have a license to take positions around this structure, around the demand and supply lines. Very, very important. As you know, the core basis of our methodology. Now we can take positions solely around structure. It's validated, it's working, and why not? This is a 60-minute time frame on the ES. Now, know this. This is very interesting. So from here, look, we push up, hold, push up, hold, push up, hold. What do we notice here? We draw resistance here. We spring, trading opportunity. Push up, hold, push up. Now we're at resistance, and what happens? First bar, again, same down here. Close off the highs, indicating supply. Then we get 1, 2, 3 bars. They narrow. It's not good buying like this. We want to see this buying. Remember, when we break areas of structure, we want to see wide spreads. Here the spreads have narrowed. You know, they're closing slightly off the highs. So for 3 hours, we are unable to break resistance. And the first bar, so 4 hours, we see selling. And this is where, what position are we in here? What condition are we in? We're in an uptrend, and we're at the supply line, so we're overbought. And what happens here? Boom. We have a hidden upthrust. We reject. It's a reversal action. We reject resistance. Supply has emerged. Perfect. Then we get this. Try to, we're going sideways, and then right towards the end, we round over, then boom. Price snaps, and we fall. And this bar breaks this line. And this, well, let's talk about this line. From the lows, we would draw it when we see it hold this price action here. 1, 2, 3, 4, 5, 6 plus the initial. That is 7 touches clearly. And don't forget the time frame. 60 minutes. That's 7 hours worth of trading, and it's holding. Clearly significant. Plus, we have this mild violation. This is where we need to use our best fit approach. If we draw it from here and we come up, there's nothing wrong with drawing it from here as we come up. But as we pass through it, we think, oh, is there a better fit? Yes, there is. Mild violation, and it holds all this price action. This must be drawn. So, back to this bar. What do we notice about this bar? Wide spread, closing weak, which what? Validates exactly the same as support and resistance. It validates this internal demand line. Oh yeah, sorry, this is an internal demand line. And there's nothing wrong with drawing demand lines, simple demand lines or simple supply lines in channels. In fact, I encourage it because it offers an edge. It gives us area of structure for us to trade around. So this bar validates. So it's another form of validation. These 7 touches, so that's 8. It's extremely good working internal demand line within our channel. And look, we see more selling here. Demand comes in a little bit earlier than we expected. We'd expect it to touch here. We rally back up and wow, unbelievable. What do we notice? This internal demand line acts as resistance after this valid break. Is that coincidence? Of course it isn't. I mean, this happens far too frequently. One cannot argue with the use of structure in their trading, you know, in whatever form. And here we have a trend channel with an internal demand line. It's simply amazing. So from the very fact it holds here and this line works, we can draw a line across. What's this? A hidden up thrust, and we can trade this. This is a 60-minute time frame, so we'd have to go in on a small. You'd have to go in if you're watching this on a 3 or 5 minute using multiple time frames once again. Okay, so if you come up and we start trading under these lows, we can let pull this in. Yes, if we do take this trade, we have to be aware of the trade's limitations. What that be? The demand line. But still, that's what, 5-6 points, 24 ticks, still $280 a contract. So just, if we do take that trade, just be aware. But what do we notice about the demand line? Look at the break. Is that a valid break? Yes, it is a valid break. Widespread, closes under. Then what happens? Holds as resistance. It truly is remarkable. Then we come down. Then we push up. Boom. Bar E. Give me trade. This, you know, we'd expect it. This is a valid working channel. Has been for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. Push up, clear rejection of the highs, hence the close near the lows. Instant market order. Not only for the bar and the structure, but just think about what's going on here. From here, we have nothing but weakness. We became oversold. Evidence of selling, no ability to rally, hidden upthrust, can't rally, round over, boom, valid break, come down, resistance, upthrust, down, valid break, holds. And then when you see this, we have to take the trade. The story, the background conditions here are weak, and there's something else. Look at this. This move down is the only reaction we get. Think, from here, hold sideways 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 here, here, we round over and then fall. So this is a good move from the supply line to the demand line. Can you see that this here is a change of behavior? We'll go in. We study change of behavior. We'll go into depth about that. So I'm off on a tangent again, but trend channels are just so powerful, and when you can combine them with internal demand lines like this, it's just phenomenal. Truly is phenomenal. So when you see this, as I just went through, a gimme trade and it closes, hit market order, do not get tickitis. Take the trade. This is what we do. We're traders. We have enough of a story to go short. Go short. Don't worry about the perfect entry. Just manage a good entry. Just manage an entry, and you should be fine. Excellent. Are there any questions for this chart? After B, where we violate, would you draw internal demand line? After B, violate up for hit. Would I draw? Okay, I see. Would I draw it? Well, it's a good question. Always try the best fit approach. You could try drawing it from here, but yes, the demand line, see, this violates and we trade back in, but here on this low we hold. We hope it's well contained within price. But to be honest, it's just the best fit. I would draw one from here as we go up, as we break these highs. I would draw this one, and if you draw this one, and then I'm always drawing lines, and you just need to have confirmation. As we break it, as we can see, this holding 5-6 times, and we get a clean fit here, which contains here, no brainer, and we know that's correct. That this is correct. Why? Because we're holding here. It has to be correct. I mean, this is not coincidental, but it takes, people are watching these levels and defending them. Okay? Good question. In a nutshell, I'm always drawing lines, and you look for the best fits. Don't keep them on. I wouldn't draw, this line here, and then this line here, and then this line here. Only, delete them. Only use the ones that serve you, the ones that help tell a story, the ones that help to contain price. Good. Is it okay to trade against the trend when you are overbought right at the end for shorts? So overbought at the end, would we be looking for shorts? Good question. How can I explain this? We can see that price is contained. What do I mean by this? Well, obviously we're not violating anywhere. Okay. Here, but let me back up. Here we come up, we down, we got 1 touch, 2 touch. That's the beginning. 3 touch, that's our second touch along here. So this is a trend that is beginning. Okay, this is the birth of a trend. Up here, this is a trend that is quite long in the tooth. Don't forget, this is a 60-minute time frame, and this has lasted 1, 2, 3, 4, 5, up until that point, 6 days. So 6 days on a 60-minute time frame in an uptrend channel is quite a long time. Here, the trend is in its infancy. So when we see we're overbought in an old trend, a trend that is long in the tooth, we are much more likely to take trades in here than we would do here. And when we are overbought in a trend that is old in the tooth, we expect price to come back down to test the demand line. That's natural, right? Think about why would that occur? Well, this is the first time. I mean, look here, this is the first time that sellers have had an opportunity to stretch their legs. We've become overbought in an old trend. It gives the sellers a license to sell. And many traders will recognize behavior, and more often than not, I can't give you a percentage, but more often than not, we will come back down and we will test the demand line after we become overbought in an old trend, which is dependent on the time frame. Okay, I mean, look what's occurring here. We come up, hold, 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 come up, hold. Now this is a very, very strong trend, and this is called a stair-stepping trend. Okay, this is a very strong trend. Most trends that people will familiarize themselves with are they come up, come down, come up, come down, come up, come down, like this. But why is this different? Because here the sellers are able to make a move. They are pulling back. They are having an effect. and here. Here, when we push up, we hold gains. Push up, hold gains. Push up, hold gains. Rally, pull back. Rally, pull back. Rally, pull back. So when you see stair step in action within a trend channel, it's extremely bullish. It's stronger. So when the sellers do have a license, as in here, a trend that is old in the tooth, okay, then it's likely to come back to test the demand line, because it's the first time they've had to stretch their legs. And also because it is the first time, again, you might see slight violations and then we pop back and then continue in the trade. Why? Because it's the first time they've had to sell in, in all this uptrend. Sometimes a little bit of selling momentum, a bit of momentum comes in before we rally back. So just bear that in mind. It's a very good question. I hope that answers it. So I wrap that up. Stair stepping trends are more bullish than the normal type of trends where we pull back. Why? Because we hold gains. Here, the sellers have an opportunity to sell. Even though it's mild in comparison to the buying, okay, they still have a chance to sell. So when we have a stair stepping trend and they have a license, we become overbought in an old trend, more often than not, we will come back to either test the demand line, or B, there might be a slight violation as momentum, because it's the first time that they've had a chance to sell in all this time. So just be aware of that, of this occurrence. And I do believe at some point during this course, we have various examples as we go deep into price action. This is market behavior. This is market dynamics, how they operate. This is advanced stuff, and I hope you're taking this on board. It's very powerful, and I like to use the word powerful. It is. It's incredibly powerful, and hopefully that it's all beginning. The pieces of the puzzle are starting to fit together. Excellent question. I don't think there are any more questions, so this concludes the uptrend study. Let's finish up and go on to the next.